This is Real Estate 360 with best-selling author, international speaker, and HGTV House Hunter guest expert, Kenn Renner. In this episode, Kenn will share with you why you should invest in real estate versus keeping it parked in the stock market. Kenn also shares with you his team's methodology to minimize the amount of time, money, and effort when investing in real estate. Enjoy this episode of Real Estate 360 with Kenn Renner. How are you, man? I just got back from the Bay Area, and I know you were out there recently as well.
Well, yes, I was. I heard you going back for Pebble Beach.
Did I say I just got back? I mean, I'm going. I got our two stories confused.
Okay.
I'm going out to the Bay Area. You just got back from the Bay Area.
I'll carry your golf clubs.
Thank you very much.
You'll be at Pebble Beach, aren't you?
Yeah, I'm going to Pebble Beach for the Concours d'Elegance, which is the Pebble Beach car show. And I'm going to be out there for 5 days, and I'm looking forward to getting out of this Texas heat.
Yeah, it was nice out there. But I brought the heat with me. So it was 87 when it was 92 here. So they were kind of a little upset with the whole me bringing that Texas weather. But
well, you know the Monterey Peninsula, though. It's always in the 60s maybe a little cloudy, a little bit rainy. Hey, I'll take it. I don't care.
No, it was nice. It was nice, yeah.
So away we go into episode 3 of Real Estate 360. I see that you have newspapers in front of you. I don't think I've seen one of those in a long time, a newspaper, but what's happening?
Well, you know, it was fun because I was going out there doing a couple presentations about investing in Austin real estate, and also got a chance to meet a lot of our clients that are out there and shake hands and have coffee and kind of get caught up, and it was really a good time. So one of the things, we had a presentation at Santa Clara Hyatt House on Friday. And then the next day we had another one up in San Mateo, and it was funny because at the presentation I did in Santa Clara Friday night, I said, look, once news hits that the market is turning in any real estate market, once it hits the newspapers, it's almost too late.
That's what we talked about.
That's exactly And then next morning I'm walking by in the hotel, and this front page front page of one of the sections, early weekend, right there said home sales shift to neutral.
It's as if they listened to your podcast.
They almost quoted a lot of things that I said.
Is that right?
Well, we talked about how what happens is when buyers see the news, and of course it's not happening like here in Austin, we're still strong and going, but once it hits the news, it's almost like it's too late. And what I mean by that is this is the first time they've had a drop in prices in 5, 6, 7 years, and buyers and sellers are used to these continual price increases and multiple price offers, and 10% over full price paying cash. All of a sudden, it shifted to neutral, like this thing. In other words, buyers are like, we're fed up with the whole price thing. We're going to stay on the sidelines, and then all of a sudden, prices start to adjust based on, I got to sell, so I'm going to drop I made 100% appreciation in the last 5 years, so I can drop it 10%, and I'm still doing well. And what that does, it starts a tumbling effect of values. And I know there were a lot of folks out there that I met that were considering maybe selling some of their properties to do a 1031 tax deferred exchange into other areas. Probably a wise thing to do. And then there are other people who are like in it, and this is good for real estate, in it for the long haul. They don't care if it drops 10 or 20%. And one of the things I learned about that whole in Silicon Valley area was they have a different view of money. There are multi-million and multi-billion-dollar IPOs going all the time, and I mean, it's like people are losing millions of dollars and gaining billions of dollars, and so they have a different view of, I can invest in Austin real estate for $200, $250. I'll just write a check. That's easy. We'll see how it works.
Those are people that actually they have really no concept of money. Like they don't have to pause and think about, should I buy that or should, day-to-day things. Do you know what I mean? It's just a different deal.
Yeah, but they still want the same things, and they also want quality of life. So I also noticed there was a lot of people that were living in $1.7 million houses, and he was confiding in me. He said, but I don't have a place for my kids. The backyard's too small. When I was growing up, we had big yards. We had the woods. So he's actually looking at Sacramento as a place to maybe own it. You can own a nice custom house in Sacramento for $100 million, and then commute back into his job. And so it's kind of interesting to see how even when you've got all that wealth, it's too packed in and it's too compacted.
I'm curious, how far of a commute are we talking about here? I'm just trying to see the pain threshold.
A couple hours, really, depending on when you go. And so, one thing I also noticed, and hopefully it's not going to happen here to Austin, but people they structure their lives around traffic. Sure. In other words, they tell me that if you go 15 minutes too late, it could be 2.5 hour difference.
Wow.
It could be 40 minutes or it could be 2.5 hour commute. And it was like, wow, what a paradigm shift. But yeah, so that was kind of the experience, and I think it was really good. I can't wait to see some of our California folks coming out here. I know the Texas people are like, hey, stop bringing them out here. But,
well, you know what, though? They're going to come, and it's good that you educate them.
That's the important thing,
and give them good information, so when they do get out here, they kind of have an idea of what to expect.
And that's what the purpose of a lot of the podcast here. Obviously, the Real Estate 365 is about, or 360 is all about real estate, all angles. But we're focusing on the investment side of things because that's really where my demand is in my clientele. Is okay, we want to invest, and so there's a couple things. Is why should I invest in real estate as opposed to just keeping it parked in the stock market or whatever? That's easy, right? And then how? And how do we, what's our methodology as a team here, and I've been doing it for 35 years, what's our methodology? How do we do things that makes it a system to minimize the amount of time, effort, and money, and maximize the return and the peace of mind of getting involved in real estate? Because it is a learning curve, and it's a new part-time job for some of these folks. And the first one is first investment is the one that sets the stage for whether they're going to do it again and again or not, or tell their two friends. And that's what's really exciting, was that while I was out there, that people did bring their friends because they're already doing okay or doing well with the investment that I sold them. So I'm like, hey.
Yeah. I was going to interject here. The key to doing it again, that first one, it helps if you make money. So you know what I mean by that. If you lose money on your first one, you're a little slower to get into that.
Yeah. Or if it stays vacant. So these are kind of some of the things that we talk about, and that's one of their biggest concerns. Well, how long is it going to sit empty? Because they hear the horror stories.
Mm-hmm.
And we got all kinds of strategies, and we'll talk about that probably in the next podcast, about how we really make the priorities for the investor and the fears of the investor, minimize the fears and increase the the optimism and the opportunity here. And then really we take it very personal that it's our job to make this a good investment for them. And obviously there's things that can go wrong, and that's why you roll your sleeves up and get involved.
So I think the answer might be obvious, but what are some of the reasons to invest?
Well, we talked about Rich Dad, Poor Dad story on the first podcast.
Mm-hmm.
And of course, that over the long term, we all know that real estate is a great place to park and grow wealth. Also, as a legacy, to be able to transfer wealth to your posterity with very little taxable gain, depending. Obviously, talk to your CPA and your financial advisor.
Do that.
But there's really several different aspects of. I'm a numbers guy, and like you said, you have no emotion attached to this whole real estate investing thing.
No, you don't. That's good. You're the kind of guy I would want.
Well, because it's all about, does it make sense? Is it someplace that people are going to want to live for the long? I mean, there's a lot of reasons, and we got this whole list of how we do our research and who our avatars are and who our tenants are and what communities we're going to buy in. But I just want to give an overall, in the short time that we have left on this 20-minute deal here, some of the main reasons why people invest in and why they do successful investing in real estate. And number one is it provides income. So the properties obviously each one of them are their own little businesses. They provide their own income, they provide their expenses, and they provide a number of other benefits. So the bottom line is rent comes in. And yes, you probably, if you have a mortgage payment on it, then you have money going out. There's your expense, which is deductible. But the rent coming in, usually the way we do it is it's more than what the payment is. Most of our clients put 25% down, therefore the payment's substantially lower than what the rents are. So you have a positive cash flow. And so, we're not getting rich on positive cash flow, but it's nice to know that I don't have to pay it every month,
Mm-hmm. Right.
And so what we encourage our clients to do is take that positive cash flow. Number one, either save that positive cash flow up for more investing, or simply just start hammering out the balance. So someday that loan will be paid off. But either way, the tenant pays off the mortgage. Where else can you have an investment where you borrow and somebody else pays off the debt? I wish they would do that with my car. That'd be great.
Right.
So, obviously income. And then the next thing is tax benefits. And this is for our higher net worth clients, and higher income clients, this is one of the biggies because they don't need the extra $200 or $300 a month. But what they do need is tax write-off. And there's depreciation is a wonderful thing that the government gave us, and it's still there. Every year you can depreciate the property. I don't know how they came up with this formula, but I like it. It's take the value of the building, because you can't depreciate land. The government says, okay, that building over time is going to depreciate in value because it's going to wear out and all this other stuff. And the depreciation takes the value of the building divided by 27 and a half years. Each year you get to write off 1/27th and a half of the value of the building. And so that is like a paper write-off. It's simple paper write-off. And it comes off of the value of the let's say you had a positive cash flow, the depreciation will wipe out that positive cash flow and then some. And so if you structure it right, there's all kinds of, we can do a whole seminar on depreciation and how it works, but you can actually even protect or shelter your ordinary income if you do it right. And that way, you have not only the depreciation of the positive, if positive cash flow comes through, it's covered by the depreciation. So you're not you're not paying taxes on that year. And then if there's any leftover depreciation, it either, number one, gets stored up in the property for later use, or it gets, it can come off of your ordinary, can help offset your ordinary income. There's some rules too about being a real estate professional, which doesn't mean a license, but that's a whole nother conversation where we see a lot of the doctors. One doctor's working, making a ton of money. The other one stays at home, and they can do what's called a real estate professional, offering unlimited depreciation based on the properties that they have. It really, what we hear about, Trump, whether you like him or not, when he said, how did you not pay taxes? They said to him, how'd you not pay taxes for 3 or 4 years or whatever it was, 5 years, 10 years? He goes, because I'm smart. He wasn't doing anything illegal. It was depreciation and the paper write-offs that he got from his casino debacles back in the 90s. Mm-hmm. So he had a huge amount of write-off, and that same concept can play even in a small scale like this. The next is leverage. And leverage is basically being able to borrow against it. So if you're buying a $250,000 property, you put 20% down, you put $50,000 down, so you owe $200 on it. If that property goes up $50,000, which it's been going on here in Austin area, at anywhere from 5 to 10% per year, or in other areas like the Bay Area, substantially more. If the property you put 20% down, $50,000 down on a $250 goes up $50,000, you've actually had 100% return on your initial investment. Mm-hmm. And so I don't know a whole lot of other investments that allow that kind of leverage. In other words, it's and that's how people get wealthy in real estate is the leverage and the proper amount of leverage. So
is there a number?
It's up to debate. Some people like free and clear. Some people like the properties free and clear, and we do have cash buyers right now looking for property. Then some of them, for me, I want to buy more and acquire as much as I can so I can start working on paying them off. So I put 25% down. That's the sweet spot for Fannie Freddie loans, 25% down right now. We just had an announcement. We're at a 3-year low now on interest rates. So owner-occupieds are not counting APR in the calculations I'm supposed to do because of RESPA laws, but it's about 3.6 according to the CNBC. And so, non-owner-occupied rentals are usually about 0.5 to 0.75% higher, so around 4.5 APR. So that's the cheapest money we've had. Well, in history now, I'm down to 3-year low, but 3 years ago, that was the lowest that we've had in 25 years, right? So historically low cost of money, and that increases your cash flow. And you fix it up. You fix that loan for 30 years or 15 years. It's fixed. So as the rents go up, or as the rents go up, your payment doesn't go up. You could have some tax increases because of property taxes, but the bottom line is eventually that loan will be paid off. All that's a deduction. Everything's a deduction on a rental property, almost everything, any expense on the property, including even some of your travel expenses. You can talk to your CPA about that. If you're coming out to look at properties and you're in the business and you're buying properties, talk to your CPA about that.
Is that someone you could, if they needed someone to help them with that, is that something that your team could help them
We
with?
have, so like on the whole circle of services that we have, we have different layers from mentorship to the people that are professional circle, which would be your CPAs, lawyers, 1031 exchange specialists, property managers, all that. We have all that covered because we have to. Even financial advisors. We're now starting to get, because where we're going is international questions about law. Hey, can I sell my house in India and bring over, $1 million? I'm now I don't have the international attorney involved right now, but we're going to have to find one because these are big deals. They're like, I had a client from that saying I want to move money out of Kazakhstan. I'm like, where's Kazakhstan? But what they were saying, and this is kind of what we're talking about, values of properties and values, the values of commodities. This happens to be cash. The value of their money is dropping. So you've got these wealthy people in Kazakhstan saying, let's get our money out and put it somewhere, because if I just wait, it's going to devalue. And so, so international law is something we have to get to know about the tax laws and things like that. And,
okay. That's good to know.
Yeah.
It's good to know.
So, of course, the appreciation, leverage, obviously, but then the appreciation, that's what everybody's kind of looking at is over the long haul, this property is going to go. When I showed you the charts last time, it said Austin real estate is a pretty consistent appreciation level going back 50 years where it appreciates at a very nice pace, levels out for a few years and goes up. Mm-hmm. But over time, that value goes up and then equity, the loan gets paid down and the difference is obviously equity. And that's almost like an automatic wealth building, right? The value goes up because we know if history repeats itself, it will go up. And then the loan we know is getting paid down every month. And if you throw a little extra, it gets paid off a lot quicker.
Right.
So it's a great way to build wealth, and that's where most people are looking at. And a lot of our clients now, they not so concerned with the positive cash flow; they just want to get in on a good property. And then last is your estate disposition, and please consult your CPA, your financial advisor, and your attorney. But the bottom line is that when you pass, let's say, we talked about my rich dad, poor dad. Let's just say that he has a $6 million free and clear estate when he passes. That will be heired to us. We will be bequeathed to us, the family members, and we will get what's called a stepped up basis. So we won't pay capital gains on the sale of the property as he would have if he sold all the properties the day before he passed. What it means, stepped up basis means is that I could sell those properties at market value today, pending some CPA or some IRS rules, sell it today after he had passed and not pay any of the capital gains or the depreciation recapture that he would have paid if he sold it before he passed. So it's kind of the same way I'm looking at it as we were talking about in my legacy of what I get to give to my kids or my charities or my churches, whatever it is when I pass. That's one of the big whys is that I'll be able to pass a lot of the stuff on with a stepped up, relatively tax deferred or free basis.
So what would be who would be the first person someone would call? Would it be a CPA about that?
Yeah, about that. If you're a financial advisor and CPA, well, let's talk our time. We've got how much time we have on this?
As much as we need. It's a podcast.
It's a podcast. I'm looking. I shouldn't have turned the clock on. You really have to have your. If you don't have a team, we have it. But you have to have your financial advisor involved. Now, remember, financial advisors are geared towards stocks and bonds and annuities, and they're not educated, and not a lot of them are real estate focused. So I suggest you talk to a financial advisor who is like mine, who's bullish on real estate, who owns real estate themselves, who believes in it. And I can tell you, there's some financial advisors, and I won't mention them around town. They're like going, I wouldn't put a dime in real estate. And, it's like, okay. And I mean, they've done very well for their clients, but it's like, well, why ignore where 85% of the people have made their wealth?
Right.
And part of the problem is that they don't get paid a fee for it.
Well, yeah, I would guess.
But no, a good financial advisor that likes real estate, an attorney that understands estate processes. A state attorney would be great for whoever does your living trust. Somebody, CPA obviously would be really good, and then making sure you have the. Yeah, I mean, those are numbers and stuff that all I can do is provide a product that will allow the disposition of real estate in their estate planning to pass without capital gains and without depreciation recapture. And once again, we have to check those laws.
Once again, knowledge is power.
Absolutely.
And knowledge is strength. Yeah. So to recap, when we started, this was reasons to invest. in real estate. You gave us some really good reasons and the how-tos of how about going about it. We just recap quickly what they are.
I want to kind of.
Or was there more?
Yeah, I just want to end with a couple quotes. No, it is because it's a good segue into this. Why real estate is, let's talk about what Warren Buffett had to say.
Okay.
Warren Buffett is obviously the equities guy, the stock market guru of all time. But what he said a couple years ago is Warren Buffett says, along with equities, single-family homes are a very attractive investment right now. If held for a long period of time and purchased at low rates, Buffett says houses are even better than stocks. Buffett said he'd buy up a couple 100,000 single-family homes if it were practical to do so. So this was in 2014, and obviously there were hedge funds that took this advice, and actually American Homes for Rent and Blackstone, they came in, literally bought up hundreds of thousands of homes across the nation. And guess what? The hedge funds are still doing it. Mm-hmm. So they got to put their money in some kind of research on this, right? They're still doing it. Zillow now is supposed to buy 5,000 homes a month. Why would Zillow, a real estate portal, buy 5,000 homes a month? I guess it's to try to gain some market share.
Will they hold on to them long enough to make money?
They don't care. Remember, it goes back to that whole Silicon Valley mentality and hedge funds and VC. Yeah. And Uber's not. They said Uber's not going to make any money. They said there's no claims of it making any money ever, but it's worth $100 billion.
Yeah, I think their end game is the self-driving car.
Well, of course, that's what's going to, because the drivers take 60-80% of that's what's going to happen.
Right.
Then when that does happen, that'll change Uber's position being the market leader in that area for sure. But I tell you, I used Uber everywhere I went. I got a Tesla Uber driver. I had a Lexus Uber driver.
Hey.
But yeah, so I love helping people in the whole mindset of real estate. Good old Warren Buffett, who's kind of at the end of his, on the other end of his life. But then I'll also talk about the millennials. This article that I had in my presentation, which is why real estate, not stocks, is America's favorite investment. And I guess our millennials are moving, and they do believe and understand real estate. And it said, shocked me. It was like 60% of the people, of our age are in the stock market, and less than 40% of the millennials are in the stock market. It's like 37%.
Their generation has seen the stock market not do so great.
They don't trust the old corporate types, do they?
They don't. They really don't. Yeah, somewhat with good reason.
And just buying. I love millennials. They buy their first house, but they get it, and they'll live frugally, and they'll do it again, and they understand, and they understand the purpose of real estate, something you can touch, feel, and own, and sell, and trade, and rent out, and so here's to the next generation of the biggest consumer generation to hit the world since beginning of time. Hello, millennials.
Amazing. And I think they're also, that generation is also a little bit more financially literate than, say, my generation was.
Yeah, thanks to us.
The yuppie generation.
Right. We were just go.
Right.
So, and I talk about that as my dad said, how do you get rich? Buy something that relatively, buy something that's going up in value, and keep your expenses down.
Right.
Yeah. So I followed two of those three rules.
Yeah, you did all right. Do you want to recap those previous? Just real quick.
Why real estate? It provides income. Somebody else pays off the mortgage for you. You don't have to be a rocket scientist to know that. You shouldn't be paying into it. Depreciate or tax benefits. There's way more tax benefits than I talked about in this short podcast. Leverage. You can borrow on the property so that you get the benefits of being able to buy more during appreciating times, and especially. And then, of course, appreciation and equity build up through the leverage and the natural appreciation that goes on, plus the loan balance going down, and then the estate disposition advantages that we have.
Those are all good reasons.
I would think
if you would like more information about this or have any questions, you can always shoot you an email or give you a call.
Yeah, absolutely. My cell phone number is 512-423-5626. And I don't mind if you're not in this market or this area. If you want to give me a call, I'm more than happy to talk to you about real estate. My email is KENN at buyaustin.com. That's BUYAustin.com. And be more than happy. I love showing our great city around, and I love love getting people out of overheated markets. So.
And if you've enjoyed this podcast, make sure you subscribe on iTunes or wherever you get your podcast. We'll do it again soon.
Great. Thanks, Sandy. Appreciate it.